Hey everyone, thank you so much for joining this live stream, this Liberty and Finance live stream. I'm your host, Elijah K. Johnson, and with us today is the founder of The Gold Forecast, Gary Wagner. Gary, thank you so much for joining us today.
It is very much a pleasure to be here and a beautiful day to talk about gold and silver.
Definitely, it definitely is, and I'm sure everyone watching today, and obviously the title of this video, kind of gave it away that we've seen quite a big rally in metals today. Gold, silver almost up $1, and gold broke through that important 1800 level. Your perspective on what's driving the metals today?
Well, when you listen to the analysts, they've got the classic explanation, which is lower yields, and at the same time, they're looking at buying the dip kind of mentality. My sense is we've been mired in a very narrow range between about 1680, high 1798.80. It's been trading there for 15 days. Typically with traders, if they cannot make a new high, they go to make a new low. And so my question was, which would it be? We got that answer today, a clear and utter breakout to the upside, taking us to a territory we haven't seen in a while, $1,815, well above the 100-day moving average, which is what I call a harmonic. A harmonic is when you have two different technical studies which both point to the same price point. So the 100-day moving average is definitely a key area, but it corresponds with $1,800 per ounce.
And that's a really good point. Yeah, that key area of $1,800 per ounce. Your perspective then on what is happening with silver right now. Are there any key levels that are being broken?
Well, we can definitely take a look at that. I'll just go ahead and pull that chart up. Silver is a little bit different.
So for all those who are joining right now, we are speaking to Gary Wagner of thegoldforecast.com. And this is right after, this is May 6, 2021. We're seeing a jump in both gold and silver. Gold is breaking above 1,800 and silver above $27. And these are key levels for silver. And we're just about to get Gary's perspective on the silver market. I guess if the screen share isn't working right now, that's perfectly fine. But your perspective on kind of what is happening in the silver market right now.
Silver to me shines twice as bright and lasts half as long. Typically, when you get a move to the upside, silver will historically outperform gold in terms of a percentage gain. Same with the way down. I think that silver has an incredible amount of upside potential because not only is it a safe haven precious metal, but highly used in industry. We've got the current administration pushing for solar. Silver is a key component in making the solar cells. So we've got a strong demand for the metal. And from what we have read, there is a shortage of silver currently, physical silver that is, and that is going to really make the price go higher. Anytime demand exceeds supply, inevitably the market must move higher to account for that.
And what do you think is causing this greater supply in the silver, or greater demand, I should say, in the silver market right now?
Well, I think in both gold and silver, they have been under enormous pressure. They're pressured by higher yields in treasury. However, the key to me is the massive amount of fiscal spending starting last year with 4 trillion, 1.9 trillion so far this year with Biden. And now he's proposing the American Jobs Act. Initial cost, 2.2 trillion. And what is key is he's looking at 6 to 8 trillion over an 8 to 10 year period. We've got massive spending, and that's due to get us out of this recession. This is a new technique over the last 100 years where we are spending more money than our coffers hold. And so the outcome of that experiment is really unknown because we've never had a scenario in the world and various economies where you can spend more money than you take in. The first occasion, of course, was after World War II. But this is uncharted territory. And as such, my belief is at some point, we'll have to pay the bill. We'll have to pay the piper. And that will have tremendous economic fallout. However, up to this point, that has not been the case. And to me, that is the most baffling aspect of what we're witnessing. I believe gold and silver should be much higher than they're currently priced at due to that fact.
I think that's a really good point with where the national debt is right now and how much the government is spending. You say it's unprecedented. You mentioned how this did happen during World War II. How is that situation different? Because I know we did see a decline then after that of the debt to GDP ratio, and we're now at an all-time high. But why couldn't we see that decline again?
We were dealing with a completely different scenario in which now we're rebuilding an economy. During World War II and immediately after, we were rebuilding cities. That requires an enormous amount of capital. You had Bretton Woods, in which there was an agreement that the US dollar would be the centralized dollar, and every country that had dollars could convert it to gold. Of course, Nixon kind of threw the coffin into the nail that ended that. And to me, that is really the beginning of fiat currency. Once you have fiat currency, it's a different ballgame because you're relying on the faith of the government to basically support whatever currency they have. And what we have seen, which is most unusual, is that the different currencies from different countries are playing a race to zero. They're all trying to devalue their currency so that people can buy their goods. And so that is uniquely different. The other thing is that we had collectively the entire world working together to rebuild all of those cities that were devastated. Now we have the US economy, which is in much better shape than the Eurozone, which is getting in much better shape. However, you've got hotspots around the world, Brazil and India in specific, that continue to have the pandemic rage in terms of numbers. I believe this weekend it was reported that there were 400,000 new cases of COVID-19 in India, and only 2% of their population has been vaccinated. And it is the second largest country in terms of population in the country. And so the potential for further decline in their economy, as well as loss of life and suffering, is real. Now, the world is coming to their aid. I'm hoping it's not too little too late, but these are things we've never had to deal with. The Spanish flu was one thing, but that occurred so many years ago without the technology we have now. I don't think it's a fair comparison. The bottom line is there are two uniquely different situations. And because of that, the outcomes could be very different.
No, again, for our viewers just getting on right now, we are live with Gary Wagner from the goldforecast.com. We're really looking right now at the precious metal markets. We're seeing quite a bump today, higher. Gold about above 1,800, breaking that level. Silver breaking above $27. Now, Gary, you're talking about all these fundamental reasons why gold seems to be a very good investment right now. Obviously, we can't give financial advice, but there are a lot of bullish fundamentals behind there. Getting kind of, again, on the technical level, we're seeing these levels being broken. What are the next levels you want to see to really confirm that we're in a breakout stage right now?
Okay, first, we have to acknowledge the moves today were major. In the case of gold above 1,800, a very important and major resistance level. In the case of silver, $27.12 is the 38.2% Fibonacci retracement. Just the other day, the high in gold went exactly within $1.50 to 1,800, 1790, 860. Silver went precisely to $27.11. So those numbers, for whatever reason, whether it is a self-fulfilling prophecy in that there's a lot of technicians believing if it goes to that point, it will find resistance, or if they are true levels of where market participant sentiment begins to say that that market is overbought, is a question that has been plaguing market technicians for years. My sense is a little bit of each. Those numbers are important because everything within the financial markets operate within the same laws of nature that other things do, the physical laws of nature. And that's why I believe that the Fibonacci sequence, which is the most important formula in terms of the universe itself, it's the simplest, but it has the ability to reveal incredible numbers that have phenomenal insight that seem to be accurate more than they're not. Now, that's where we're at. The next level for me in gold is 1852. The next level for me in silver comes in just at around $28 per ounce. That would be the next major levels of resistance in both of those precious metals.
As we stand right now, at the levels we're at right now, are you bullish right now? Do you think it'll continue higher?
All I can say is I sent out recommendations last night. Our subscribers are long. We're long from about 1810. So we've only got a little bit in there, but that pop was quick. And the thing is that I believe that it is a true breakout. Not only did it go above 1800, it did so substantially to 1815. That to me is really important. I think we'll see follow through buying because of that, because the initial move would blow out any of the short player stops. But to go to 1815, it's not just stops being hit. It is market participants buying the dip, waiting for that opportunity, which we got today.
So it sounds like being long gold right now, what would make you reverse that position? What kind of levels would we need to see gold and silver break down below?
In the terms of gold, I closed below 1800 because support and resistance to me is the floor and ceiling, but they're the same point. If I look up, that's resistance. When I look down, that is support, but it's the same floor. So a break below 1800 would negate what I believe was a tremendous bullish potential. In the case of silver, it was a number that I just mentioned, 2712. It's a key number. We've seen it challenge it, but not been able to take that number out for quite some time.
And your perspective regarding like physical buying of metals, I know that there's been a push recently, this last Saturday, the Silver Squeeze 2.0. How much of an impact do you think that that is having on the price?
It has a tremendous effect on the physical market itself. I specialize in futures, and that is paper. Paper is not the same as buying and holding physical gold or silver. My belief is, even though I'm a futures trader, is all investors should have a minimum of 5% in gold and silver coins or bullion. Numismatics to me are different because the grading makes it the pricing a little bit more nebulous, but an ounce of silver is an ounce of silver. And depending on the amount over spot pricing to cover the coin makes it a even playing field. I also believe that traders should hold that in their safety deposit box. They should hold it on their own and have access to it. I believe maximum, maybe 15% in those hard assets. It really is an insurance policy, but B, if you look at it over time, both gold and silver have performed eloquently. They've consistently moved up. Yes, there's been noise in which it's gone through a range, but it's kind of like real estate in that if you look at it over a 20-year period of time, it has always moved up. And it is for that reason that I believe physical accumulation is key. Now, how do you go about that? Typically, it's the inverse of what is logical. You want to buy the dips in terms of buying physical if you believe it's going up rather than buy the breakouts. in futures, I am more comfortable buying the breakout than I am the dips because I haven't had confirmation. We've hit that V formation, hit a bottom and move back up. The key is that all market participants that have any kind of active portfolio need to have a portion in hard metals, in safe haven assets. That hasn't changed for 20 years. And I'll give you a quick example. Gold really does not change in price. It's the same throughout history. And what I mean by that is in the 1800s, you could have had a $20 bill or a $20 coin. With both of them, you could buy a very, very nice suit. You could stay at the plaza. You could have a steak dinner. You could go to the theater. That was the buying power of $20 back in the 1800s. Now, and gold stayed for $20 up until Roosevelt confiscated all of the gold and a year later moved the price to 35. Now, let's move forward to 2021. We've got an ounce of gold worth about $1,800. For $1,800, you can buy a very nice suit. You can stay at the plaza, shave and a haircut and a great meal and a theater ticket. And what I mean by that is gold has remained constant in terms of buying power. It is the currencies that fluctuate against it. And so for that reason, the precious metals offer a stability that is unlike any other asset class out there.
You mentioned the importance of holding physical precious metals that you can actually hold in your hands. Can you expand for our viewers kind of some of the advantages of doing that? Because I know there's also, trading where you trade the markets, and that's obviously not the physical metal, but the advantages of really holding the physical metal rather than the paper contracts.
Okay, well, first of all, in regards to holding precious metals as to having someone else storing it, if you are trading it, you don't want to hold it. It is cumbersome to send it, exchange it, and do all of those things. If you're working with a reputable firm, such as the firm you guys work with, I would feel safe having them hold it if I was trading it. However, when I'm looking at it as a long-term safety net, so to speak, I want access to it. Now, I'm not saying that there's going to be a day when the currencies are worthless, and unless you have bits of gold or silver, you can go out and purchase things. I believe there's something about holding a gold ounce in your hand. I collect the Buffalo 24 karat pieces. One, they're beautiful. Two, I feel as though I have wealth in my hands. And to me, just feeling that gives me a feeling of strength, more importantly, security.
That's an interesting point, because often those feelings we have will reflect something in reality. And I think the reality is so much of our world is digitized right now. And it's important to really have something outside of the system. So I think that's a really good thing. Now, before we let you go, Gary, did you want to share with the viewers where people can find your work? And if they're really interested in learning more.
Absolutely. Our website is thegoldforecast.com. It's all one word. We have extensive videos on our YouTube channel, The Gold Forecast, and we actually have almost or a little over 2,000 videos. In other words, for the last 10 years, I have produced 5 videos a week. All of them are on the YouTube channel at no charge whatsoever to either subscribers or viewers. And what that allows you to do, I have a track record. You can go through and see when I bought and sold, but with the video, you can verify whether or not I'm actually being transparent, honest, and forthcoming. Videos can't lie, and when you put them on YouTube, it timestamps a date. So I have used YouTube as kind of a vault to show all of my work for the last 10 years. The other thing, and I think this is the most important thing, I do trading recommendations for our paid subscribers, but it is as or more important for me to teach them those techniques so they can carry them over into other markets and have a real concrete understanding of why we're doing what we do. So for example, when I put a stop in the other day, I explain why that price point is where we put that. And typically I'm looking for key levels of support and resistance, putting it 1% or 2% lower. But the key is by going to the YouTube channel, you are able to view 10 years of historical videos and see where I was wrong and see where I was right. Because my belief is effective trading doesn't mean you get 10 out of 10 trades. It means that you hopefully get 6 to 7 out of 10, but your winners outperform the losers. Now, how do we do that? Money management. And so I attempt to teach people that view my video the techniques I've developed over the last 35 years to do that. Lastly, the technical system that I use, and I am a hybrid technician. What I mean by that is fundamentals move the market. There is absolutely no doubt. It's not about numbers, but I believe that numbers and mathematics is a way to distill fundamental events into a formula that is really black or white. And the reason I started doing that when I was a green pea and young, I'd listen to one economist. He'd make an eloquent case as to why gold was going up. I changed the channel, and there was another analyst convincing me, rightfully so, it's going to move down. And I ended up being thoroughly confused because they both made sense. They were both intellectual and smart analysts, but someone had to be right, someone had to be wrong. Numbers don't lie. And that's why I really focus on the technical aspect. However, I look at primary direction as a byproduct of fundamental events that unfold. And so it's fundamentals that kind of give me an idea of where I believe the market's moving. I then use technicals for where I want to enter, where I want to exit, where I want to put my stop, and to work with the trade itself. And all of that is available to anyone that wishes to spend the time and view these tapes.
Fantastic. No, I think that's so awesome that it's, just archived on YouTube. Awesome. Well, the website is thegoldforecast.com and The Gold Forecast on YouTube. And for all our viewers watching, also, if people would like to not miss a single interview that we're doing, they can go to libertyandfinance.com. On the left-hand corner, put your name and email, sign up for our free email newsletter. And if you're interested in, acquiring precious metals, we do that through Miles Franklin. We're all brokers here. You can find the information to acquire precious metals through us and Miles Franklin in the description of this video, and support the channel that way. So once again, Gary, thank you so much for your insights today and for your time.
My pleasure. But one last thing I would like to say, and it's a shout out to Miles Franklin, one of the most reputable companies to buy gold and silver. I would buy it from them. And that's the best endorsement that I can say. And then lastly, for those that want to try out our system real time, in other words, not look at the historical data, judge for yourself. If you feel it has value, you can sign up for a 14-day trial at no charge and see if it meets your criteria, meets your comfortable level in terms of trading risk and reward, and then decide after 14 days whether or not you see value. And if you do, we hope you join us as a paid subscriber.
Fantastic. Gary Wagner, it was so great to have you on and really give your analysis of the crazy spike we're seeing in metals right now. I guess before we let you go, any last thoughts you'd like to add with respect to what you're expecting for the markets these coming days?
First, long term, at some point, the fact that the Federal Reserve has a balance sheet in excess of 7 trillion. Now, that's different than fiscal debt, but the fiscal debt has grown out of control. It's in the trillions. And at some point, I believe it has to be accounted for. Otherwise, our great grandchildren are going to pay for it. It's something that's never been done. It might turn out that it doesn't matter. I am in the camp that doesn't believe that. I believe what you borrow, you have to pay back. And I believe that a government should run its finances in the same way that a household does. You don't spend too much more than you make. And if you have to for an emergency, you make a plan to pay that back. I'm not seeing that right now with the current administration or the last administration. And that to me is troublesome. That's why I'm so bullish long-term. Short-term, any kind of noise can happen. Things flip on rumors, market sentiment changes on a dime. However, long-term, I see nothing but higher pricing. I am looking for gold to exceed the all-time record high. I would look for a time frame of about a year, maybe even a year and a half. I hope it's sooner, but I believe that by then it's almost inevitable.
All right. Well, Gary Wagner, once again, thank you so much for your time and God bless.
God bless, and it's great to be here as always.